Hello, ladies and gentlemen, and higher apes. This is the DAX speaking, bringing to you the latest economic, financial, and also personal news. I'm pretty much in awe with what's been happening lately. Last time I came on cam, that didn't sound right. Okay, in my last appearance on camera, there was lots of government intervention in the market. Still is. I said I would be bullish for stocks. Of course, that was. Maybe not in the same day, but a couple of days later, there was, for instance, the biggest one-day surge in points in the Dow in history. This means the net change was the highest, over 900 points, I think. This was not the biggest percentage gain, but it was one of the biggest, perhaps the third or fourth biggest in history after 1933. Well, it really doesn't matter. What matters is government continues to pump money. Government continues to fabricate dollars out of thin air. And this will, I believe, turn into a very severe quasi-hyperinflationist period. There is the real danger of depression. There is the totally moderate and reasonable conception that we will be seeing a very prolonged and severe recession as credit standards and totally tighten, making it a lot harder for businesses, for consumers to finance their consumption. Some say that the mentality, there was a mentality shift too, or that it will be, from consumer and a responsible consumer mentality into a more savings oriented mentality, sort of like a shift to the Chinese mentality. Of course, I don't quite believe it totally, but there's some truth to the fact, and that will be healthy for the economy in the long run. But it will be very problematic in the next 24 months. This is very, very hard times. Time-wise, the market has been in a bear market for a year now. Some say it hasn't really been technically on a bear market since July the 2nd, I think. That's when the indexes completed a 20% decrease from their previous highs. And that's where you actually, traditionally anyway, say that we are in a bear market. So, tops 1 year, less optimistic view, we've been for not even 6 months in a confirmed bear market. May I remind you that we've been in a bull market for 5 years, 2003 to 2007, and those are 5 years rising, and at tops 1 year decreasing. We have retraced almost 100% of movement of the bull market in 1 year. That's pretty significant. and having in mind that we are just now confirming a recession, that some companies are actually beating expectations, really, like Apple and Google, companies like that. We are yet to see the really, really bad agony of the bear. We are going to feel the pain. Time analysis wise, I know that bear markets are usually a lot shorter than bull markets in duration, but by no means is the ratio 5 to 1. So I would expect at least 6 months of bear and probably a stabilization. If we are to start in the near term a stabilization, I would say that we need to tank to a lot closer to 600 to 700 points on the S&P and then stabilize in a range for, let's say, 700 to 1,000 for a period of over 6 months. And that would be very painful, except if you're a bull, because bulls make money and bears make money. Pigs get slaughtered, or so they say. So I would really much advise that if you invest in the stock market, you'd be very, very, very careful and manage risk. I know a lot of people from experience. Also, I tell you this: if you do not manage risk, you get slaughtered. You get slaughtered. You have to be realistic. You have to face the facts, and it's okay to have a bias. But if you see the market, price and volume wise, talking against, proving your bias wrong, you have to be willing to quickly shift your views and adapt and cut your losses. Okay? That's essentially what will make you a successful or unsuccessful trader or investor. One very much dangerous and problematic, though very much polemic, theory that I've encountered is the secular bear market theory, and that relates to at least 2 phenomena. First phenomenon would be that periodically, and this is decades or even century-wide, we have depressions. We have very steep, very prolonged declines in price action. Nominal terms. Of course, real terms too. We're talking nominal terms here. Then you have the observation that since 1800, and I can't share the link with you, but this is contested because they say it's a logarithmic scale, and for some reason logarithmic scales are supposed not to be so valid as linear scales. If someone can explain to me why, I would very much appreciate it. But the fact is, in logarithmic terms, if you put up a chart of the Dow from 1800 till, say, 2008, you will see that prices have been ranging in an uptrend and an upward channel, and that we are just in the top of the channel, of a 2-century channel.